Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. Well, in general, in the weekly report, we said that market stands in a kind of the indecision, but in the short term it seems that bears still have a bit better position. The recent performance that we analyzed in the weekend, and you can see that indeed the market has moved slightly lower. But that's at the same time, this performance is of course not the one that we would like to see. So you probably know how the normal bearish market develops. So you could see here how it should be in the beginning of this downward action. But here it definitely starts looking like stretched action. So it's difficult, very slow, and it seems that market meets significant support with the keep going lower. So recent drop, it seems not because of the energy political tensions around the Jordan and so on, because we do not see corresponding rally on the United States dollar and simultaneously dropping of the yield. So if we'll take a look on the yields, indeed we have downward action, so that makes dollar weaker, and that might be the reason why actually euro currency is now appreciating. And the same we could say about the gold. So in terms of the geopolitical situation, usually they goes together to the upside, which we do not see currently. So on the dollar index, we also do not see any bullish dynamic. So here is no rally back to the quality, to the safe haven, and the market still stands flat. So this makes downside action here a bit this makes this downside action a bit tricky. So yes, it is going down. If you have the bearish position, you could keep this, but control the performance of the market and don't forget tight stop gradually. So for taking the long position, currently we do not see any good background. Yes, breakout might happen, breaking of the overall tendency in opposite direction, but since currently we have nominal bearish trend not only on the daily but on the weekly chart as well, and we do not have any even signs of the reversal yet on lower time frames, we think that it is too early to consider taking any long position. Although, as I said, this actually seems tricky, and we have corresponding moments on the other pattern, on other markets. So for example, if you take a look at the cable, yes, we have here some minor grabbers that stands right in the top. That theoretically could lead to some drop here, slightly below these lows. It is possible, but in general, guys, take a look at all this construction. What we have bearish downside trend, but price action is not bearish. It stands flat, especially after this upward action. We've got divergence and, as you can see, downside MACD, but price action is not dropping. Usually this indicates the bullish dynamic pressure and could lead to the breakout here to the upside. So be extra careful if you consider taking any short position on the cable. Since cable stands in relation to the euro and in the component of the dollar index as well, if we will see this rally correspondingly, it could make impact on the dollar index performance also. And obviously on the euro currency, hardly we will get strong downside tendency if we will see rally on the cable. But the question is where it will happen. So for example, euro currency easily could complete the OP first, reaching 107.40 target that we have discussed, and then maybe some upside reaction could start. So currently at the 4-hour time frame chart, take a look what we have. Market, here's, by the way, guys, we have very interesting butterfly. So take a look how it is a bit complicated with this right wing performance, but based on extensions, everything was just great. So take a look, reaching 127 retracement, then market was going lower, completes now 1618, 108 area, shows minor pullback. Here we've got minor grabber. Grabber suggests downside continuation and taking out of these lows. So maybe market will just keep going to the OP. At the same time, this is butterfly, and theoretically market could start showing a bit deeper retracement. But this retracement should be not very extended. It's just because market stands below the COP. It is going with this ABCD to the downside. Major retracement on the COP already is done. So here, although we could accept some pullbacks on the lower time frame, if you have bearish position, control that retracement should not be too extended. So because market has to stay on the way to the OP, this is usually how normal bearish market should behave. If it starts forming some reversal swings, moving too high, this will be bad background for the bearish context, in general for the bearish position. For example, on the hourly chart, you could keep an eye on few levels. First of all, this is 108.50 that's already mostly has been tested with this upward bounce. Here's, by the way, our XOP that we discussed. So I would consider only probably this level as the first indicator, and confidence. Confidence around 111.70, 111.80, I would consider as some kind of the validity indicator. So if market will break it up, forming bullish reversal swing, it might start smelling like the head and shoulders pattern on the bottom, and maybe it could become the first sign of the possible changing of the tendency. This will be bad if market, for the bears, if market will jump about. Theoretically, until market stands below this area, we could accept this action. Just because, as I said, since we have the butterfly, it usually suggests at least 30% retracement, and 30% stands precisely right there. So these fib levels are based on the top of the butterflies, 111.70. Some kind of the ABCD triple to sell, it's okay, so no problem. And if you consider taking new short position, that probably an area that you also could start thinking about using compounding entry or whatever. But that will be a really vital area in the current short-term bearish view, bearish setup. Also, very interesting level, guys, right there. So as you can see, this is unfilled gap. But what is more interesting is that this is the starting of the week. So market has opened here, creating the top, and just collapsed. Now let's see what will happen here. If market will not close the top, the gap, and will not set the new top for the week, that will be a very good moment for bearish scenario. So that being said, as a bottom line for the bulls right now, I do not see anything to do with. For the bears, you have two options. Since we have a grabber on the 4 time frame chart, you could take, for example, mine a small bearish position here, not for a whole load that you're usually trading, and see what will happen. If instead of the downside drop below this area, we will get kind of the ABCD, you could add more somewhere around 150 rate to get some average position, well, around 108.40, 108.45 maybe, which will be more or less acceptable, and then see what will happen. So your risk in this case will be this confluence and this top. So market should not break it up. That's one of the way how you could act today if you consider taking the short position. Of course, you could just wait for deep retracement. It's also possible. Or you could totally set the position with the grabber. Once, if grabber will work and market drop below this lows, just move the stops to the break even and see what will happen. So that's in 2 words that we have on the euro. Let's keep watching.